thank you so much for joining this webinar today for PayGroup's first half FY22 update. Yeah, the company has just announced a slight ARR guidance for FY22 to at least 37 million just earlier last week. So on the call, we have the CEO, Samlal, and the Chief Commercial Officer, Sachin Goklaney. Yeah, and maybe before we start the presentation, I would just like to inform everyone, if you have any questions, please input them in the Q&A button below, and we will get them answered at the last 30 minutes of this webinar. So without further ado, I shall pass over to Mark and Sachin to start off the presentation.
Good morning, good afternoon to all the attendees for the PayGroup webinar today. I'm Mark Samlal. I'm the founder and CEO of PayGroup. And the problem that PayGroup solves for is to give our clients one view of their workforce in the Asia Pacific region across the three domains of employment that we serve with our SaaS and our SaaS Plus services. Today, PayGroup provides fully compliant, mission-critical solutions for over 7.5 million transactions per annum. We are creating over $10 billion in salaries and lodgements through our payslip activities. And we're trusted deeply by over 2,500 customers in our growing segments. We're completely regulatory and compliance experts in Asia Pacific, and we have an extended reach through our partners who our clients also trust to give one view of their workforce. And Sachin will talk about our exciting organic globalization strategy with our partners later on in the presentation. And today we'll be further informing the market about our high margin monetization across those 7.5 million payslip transactions that we operate, which creates as a sub-segment of the $10 billion of funds that we're creating through our solutions. So in a nutshell, we're trusted by the world's finest companies, and we're providing technology and services, all of our IP, across our 2,500 clients. Extremely strong growth. And the FY22 guidance that we're giving is all organic growth. The acquisitions are finalised, and we are in an organic sales cycle here. And we're delighted to upgrade our guidance to at least 37 million ARR on the basis of extremely strong economic tailwinds for the business, which we'll further allude to in the deck. It's a world-class technology trusted by leading companies, again reinforcing that PayGroup is dealing with the world's finest organisations in traditionally which is one of their top three spends around their workforce and their workforce salaries. So we are embedded at regionally headquarters or global headquarters, speaking about this spend on a regular basis and optimising the way that we create the transactions on behalf of our customers to further monetize. So we are really in a very strategic area of any organisation's business, growth into new markets, employment, and certainly retention. So from a strategic overview, our Asia Pacific software and services business is all about that mission critical and compliance solutions that we discussed. We have a unique and differentiated offering across the three major sectors of employment. Our client base, as you can see, is growing. They are enterprises. They are very well-known brand organisations, and they are also expanding and investing heavily, as we've seen topically with Japan in the last 4 months. Our core business is profitable, and we are focusing on margins every day, both with what our Chief Operating Officer and Chief Product Officer are doing around margin improvements from a technology and a service perspective. And that core business is 90% of our total revenue. Today, we're also pleased to describe to you our monetization opportunities in further slides. But with enterprises, we're reducing the complexity of moving that $10 billion around the world as they require them. And with our clients' employees, their payees, we're giving them greater flexibility and opportunity for increased wellness as a result of building workflow in our SaaS. And today that's 10% of our total revenue, and we'll show you the growth lines on those. We listen to our customers. That's why we're trusted. And the proof of our trust is our retention rates, which we'll describe later on. So our clients have two models to choose from. Our clients can take our SaaS and choose to do it themselves, which is obviously one sector of a corporate philosophy. Or our clients can take our SaaS and use their team members to run the processes and create the events that HR and payroll creates every day. So they're the two simple models that we work with, where PayGroups managed it or our clients manage it, all implemented across our SaaS. Breaking down into the different dynamics of those businesses from our software and our services, I would like to remind everybody we are 3-year contracts. They have automatic renewals, and a customer must see out their contract. So it's not a situation where it's SaaS deployed and gets switched off after 1 month. They are 3-year repetitive revenue contracts. Such?
Thanks, Mark. And just taking on the themes of whether PayGroup manages it or the employer manages it, how our financials are split. We mentioned 7.5 million annualized payslips. 30% of those payslips are done where PayGroup manages it. And it's a high unit economic because it represents 70% of our revenue, because it is a service with a tech-enabled delivery. On our, where the employers and corporates manage it themselves, we have a high number of payslips on our SaaS solutions, and that represents 30% of our revenue, and it is a higher margin. So just to give you an indication of how our margins are deployed in both sides of the verticals of the customer set, in our PayGroup managed payroll, our margins, our gross margins are 35%. In the employer managed or SaaS version, where the companies do it themselves, it is a 70% gross margin. And we're focused on improving both sides of the gross margin through productivity improvement, as Mark mentioned earlier, as well as monetization, which we'll come to later. And that's adding additional revenue onto an existing cost base to drive unit economics and margins up.
So our clients are loyal, and the loyalty economics of our business is increasing. We've got a lifetime value, or average lifetime of a client of 9 years. And that's certainly something that we're very proud of with our SaaS technologies deployed and the services that we offer. And we do consistently review our levels of engagement with our clients through internal Net Promoter Scores. Pleasingly, we're at 98% in terms of our customer retention at the half year. Now that has moved up from 95% through to 99 and at 98 at the moment. We are delighted with that service performance, both for our SaaS performance and our services. And 9 years, in my view, and I've been the founder of this business, customers for life. We've got some of our customers from a very long period ago, and they're consistently, with our growth of modules and our growth of monetization opportunities, increasing the share of wallet. So it's important for us to focus on our account management because they will spend more, as we've seen with some recent upsells of laser clinics, which we've talked about, moving into new geographies, Terminos acquiring businesses and moving from Asia into Australia very strongly, Weatherford growing with us with more geographies. We consistently focus on giving our clients one view of the workforce across Asia Pacific. With that loyalty, with the 9 years, with the customer retention rate, it drives referrals very strongly. This is all organic and leads me to pass to Sachin about some indications on sales revenue by source.
Thanks, Mark. So all organic growth in FY22, 80% of it driven by our direct sales force. And that 80% also includes upsells that Mark's mentioned here, laser clinics, Weatherford, Terminos, where customers spend more. And the second aspect of our organic sales are about the global partner program. And when we talk to the trust and loyalty of our customers, this also speaks to the trust and loyalty of our partners, where they are the ones doing the sales on the ground in geographies that we are not present, but we are the trusted partner delivering that work on behalf of their clients, and their clients are aware that PayGroup is the one delivering the work. So that represents 20% of our sales growth, which just shows you that loyalty and trust that even our partners have in us.
We've built up an unparalleled exit barrier in our business to be able to provide our SaaS and solutions. Our country expertise continues to grow, and the ability to provide those SaaS across those regions, countries, beg your pardon, and regionally focused, including the bottom right-hand corner, underpinned by the last mile, is clearly what our customers are looking for. Not every organisation invests in infrastructure of people with which to administer payroll, technology, mission-critical last-mile services in the jurisdictions that we operate in. So we do that on behalf of our clients because we listen to our clients. We build up a deep compliance group within the organisation, and we run a centre of expertise specifically around compliance and the regulatory environments that we operate in. And having our team members in key critical locations to provide the services, and then also near shore to decision making in sales, is very important. We would not win some of the brand names that we have today if we didn't have outstanding team members in the Philippines, Malaysia, India. And they're all brand names that decisions are made out of Sydney or Singapore. So it's very important that we're differentiated in our ability to provide solutions across the three segments of employment that we are currently in today, underpinned by the last mile. That's the very difficult last mile.
Just to explain the Global Partner Program in a little bit more detail, these are partners who trust us for their customers where we deliver the work in geographies that they are not present in. So I'll take some examples like CloudPay, Emedis, Ultimate Kronos Group. They sell to the US, European organizations who have a global presence. But these organizations like CloudPay, Emedis, and Ultimate don't have a presence on the ground like PayGroup does in 75 countries. So we become their trusted delivery partner, and each of their clients knows that it is us doing the work. So we become the partner of choice. And the other key metrics on the Global Partner Program is it is lower customer acquisition cost for us because the partners are the ones doing the heavy lifting in the sales. So today we have 21 salespeople directly employed by PayGroup, but we are leveraging the sales team of our partners around the globe that we are not present in to bring more sales contracts to us. So it's low customer acquisition cost and higher margin channels, which complements our direct sales activity. And all this leads into what are the industry tailwinds that are supporting PayGroup's business. The increasing regulations are a core aspect of the mission critical work we deliver. In the pandemic, the accounting rules remained the same. You debit and you credit. But the payroll rules changed in every geography as governments raced against the clock to provide incentives, either in taxation or payroll tax or pension funds throughout our geographies and around the world. So keeping on top of those and putting them into our platforms and making sure we keep our clients and their employees compliant gave us strong tailwinds where we generated a lot more leads from companies who could not cope with doing it internally anymore. Reputation risk. Those of you listening in from Australia would have read very much over the last 2 years, the increased activity around underpayments. Now, that's a reputational risk where some states in Australia have taken it one step further and said, well, that's a criminal activity now, not just a civil activity or civil crime. In Japan, for example, as well, if you create incorrect compliance to your employee's payroll, a director of that company can be criminally incriminated. So we solve the reputational risk for our clients. It is an underserved market. multinational companies who are around the world through the pandemic scrambled to get everybody working from home, remote workforces, but they still wanted that single view of workforce. So PayGroup, through its technology and service-enabled technology, was able to offer that as companies expanded even during the pandemic, because their internal teams were unable to cope with the increasing demands when they were accessing the systems from their, kitchen table, for example. And our APAC exposure, Asia accounts for over half of the world's foreign direct investment. And what we've seen, because of the data we carry, is that there's a lot of investment specifically going into markets in Asia as companies move away from some riskier countries that have come on board during the last 2 years, for example. Companies are putting a lot more investment into Japan, and that's why we made the conscious decision of acquiring a business in Japan, which was very well known to us because it was a partner of ours, to then enhance our on-the-ground presence there. So really great supportive industry tailwinds driving the organic growth of PayGroup. Mark mentioned about the 10% of our revenue today that aligns to monetization. I'd like to now take you through a few minutes of what that monetization really means. We have the monetization to our customer base on 2,500 companies, but we also have our monetization to our 7.5 million payslips that we pay annually. Now, when we talk about our customers, we talk about how we're going to monetize that company's activity as they grow around the region. Payments is a direct example of how we're doing that. 18 months ago, we had a very small payments infrastructure for PayGroup, and today we can pay our clients' employees in 75 countries. We've added the payments service using technology as part of our delivery, which increases that revenue within that customer as we keep them compliant in that last mile. Then we come to the payslips part of monetization. This is where we have a captive audience on our platform where 7.5 million payslips are generated, and the over $10 billion worth of payroll and statutory payments are recorded and reported and processed. So we leverage that captive audience, both from a single country or a global monetization. We do that by embedding inside our platform solutions which link to financial well-being. And an example we've shown here is superannuation choice. That is a single country solution in Australia, which allows employees, when they're onboarded, to choose a superannuation fund, which we have partnered with in Australia. And when that employee, through their onboarding, which is embedded inside our workflows and platforms, they choose and we make extra revenue because they've monetized our financial well-being product. And what's coming in the future, which speaks to worldwide or multi-country monetization, is on-demand pay, which I'm sure you've read about in the markets, which is commonly termed the earned wage access. And I'll come to that later in the monetization presentation. So specifically on the payment sector, this is very fast growing. And as you can see, we've grown from a base in Q1 of FY21 to where we are today. It's been a fantastic growth in the revenue that we are creating as part of this monetization upsell. It's a complementary service to our core payroll, but it also leads to the regulatory compliance because we want to make sure our clients' employees are paid on time, and our clients' superannuation and HR payroll tax are also lodged and paid on time. We're analyzing this at $1 million revenue per annum, and this was a much lower revenue 2 years ago. So we've created this, and it is a high margin offering because it is a payment solution bringing extra revenue at a lower incremental cost of delivery. When we look at some other ways to monetize our customer base, it's what we've created in our module suite of 27 modules that we've either built or acquired as part of our journey. And what we do here is an example that was used earlier in the cross-sell and upsell. Volvo comes to us and wants us for compliant payroll. What do we do there? We also upsell 2 modules of HCM to them so that it becomes a combined solution to deliver. And more of our customer base is now approaching us to digitize themselves as they finalize their hybrid work environments, and not everybody's going to go back to the offices. So paper-driven solutions are no longer, and the digitization has increased, helping us create more upsells like onboarding. How do companies want to onboard all their global staff without being present in the location? Learning and development. How do you do training when you're not present in the same room? So you digitize those into the PayGroup solution. And that's where we create monetization revenue as we upsell our module base to our corporate customers. A little bit more on our superannuation choice. As I explained earlier, it is a very Australian delivered solution at the moment, creating $600,000 of annualized revenue at over 95% margin. So we've spoken about the margin, 35%, 70% split between where we do it for the client and the client does it themselves, but we're focused on driving the margin up on both sides by adopting such monetization techniques, which increase revenue without increasing incremental cost.
Thanks, Sachin. And it's very clear to say that our payroll and services area will continue to focus on its expansion and growth in payslips across Asia Pacific, across the verticals of employment that we work in, being multi-site retail franchise stores, contractor companies, recruitment firms, and obviously corporates. It's all organic from our outstanding sales team and digital marketing team, and also very well complemented with new customers from our global partner program. That's giving us the pay slips with which to further monetize. From an enterprise monetization perspective, the world's getting more complex. The ability for PayGroup, when it's creating the $10 billion of payments, to offer to our enterprise customers our solutions to distribute those funds for the various payrolls around the region and all the last mile lodgements, some of which are electronic, yes, in Australia, but often are not in other parts of Asia Pacific, where it requires people on the ground to do so. We own that pathway to be able to further monetize that. It's high margin, as Sachin explains, extremely scalable, and the implementation costs to that are very low compared to the core solution of effort of getting the customer live on a mission critical payroll solution. And as people join our clients and as they look at our platform when they're onboarded, and maybe there's one job in Australia that gets onboarded 10 times, that view of monetization and increasing the adoption rate of monetization from a super choice and soon to be on-demand pay in Q3 for PayGroup will again increase the share of wallet, improve the unit economics of a pay slip, and certainly drive margins up. So as we come to the close of our presentation and look forward to the questions and answers, our business is profitable and growing on the mission critical largest expense in an organisation of payroll and last mile lodgements. We are uniquely and highly differentiated. If a client has normal everyday corporate employees and a pool of contractors, we've got SaaS and SaaS and service solutions with which to address that. Our clients are growing. They're signing for 3-year contracts, all repetitive revenue, with automatic renewals with a 98% retention rate. So that's extremely sticky business. And the monetization opportunities that have been created by the strategic entry into high volume pay slips with high turnover of employees is core to underpinning our monetization strategy. Of course, I'm the founder of PayGroup. I remain the largest shareholder, deeply invested, and I'm very excited where we sit today, both in our organic sales team and the fact that our sales funnel is 5 times larger today than this time last year. So we are selling at record levels and we are strengthening our sales funnel as well on an everyday basis with our unique differentiated offerings.